The dollar is lower in trading here today versus the three major currency pairs. The dollar versus yen is down 1%. Recall that on Monday, the dollar did rise after the U.S.-China trade deal, but yesterday it fell, and today it's fallen again. So let's talk about the tacticals that are driving these currency pairs now in this video to start the U.S. session. Let's get started. All right, looking at the hourly chart of the euro versus U.S. dollar, you can see, just visually see this floor right here between the 112.65 level and 112.75 level. There's a number of different swing lows coming in, forming that floor through here, and then revisited here, and here. Then we broke below that floor. We had one rebound back above the old floor, which was now a ceiling, and then reestablished the ceiling as a resistance and moved lower to our low price that we saw in the month of May down here on Monday's trade. Since then, as mentioned, we've seen the dollar decline with 2 straight days to the downside. And where do we return to in trading here today? Well, right back up to that swing area, right back up to the 1.12657 level. Found willing sellers. Also near that level is the 200-hour moving average. So a nice dual level of resistance right here. What traders could do is lean against that level and hope that the price stays below the 112.75, which it did, and we've seen a rotation back to the downside. Now the question becomes, what's next? And if we take a broad look, we're in between the 100-hour moving average down here, which is also near a swing level down here. That swing level, by the way, goes back in time to the 4-hour chart. I have to go all the way back to this area right through here, where the price had this ceiling here before moving to the downside. So it was an old high going back to August of 2024. So it has significance here. I'm going to move back to our hourly chart and take a broader look again. Here is that level that I just showed you off the 4-hour chart. And also near that level is a 100-bar moving average at 111.906. So between 90 and 112.13 is now going to be support, also supported by the 100-hour moving average on the downside. So we have this battle going on between this swing area and the 200-hour moving average on the top side, this swing area and the 100-hour moving average on the downside, and the market's waiting for the next shove, waiting for the next move. Recall again on Monday, the price fell sharply to the downside. On Tuesday, higher. Wednesday, higher. And now we're back from whence we started, I guess, on Monday's trade. So there you have it. It's more of a neutral area, but we took out the gains in the U.S. dollar that we saw on Monday in the process. Let's take a look at the dollar versus yen next, and we'll look at the hourly chart for this currency pair. Actually, I'm going to go to the 4-hour chart here just to show you this area up through here, the importance of it. And you can see how the high price on Monday's trade with the big surge to the upside came right into this swing area here. The swing area was an initial low going all the way back to November, December of last year. Then we came back down to that level in February. In February, found support. It got messy through here, but the last thing the price did right here before moving to the upside was to retest that area and move higher. We came back down to it here, moved higher, and then we broke below it with momentum here, and we didn't return to it until just this week, where the price moved back up to that 148.56. Up to 148, looks like 72 or 73. Found willing sellers and pushed up price to the downside yesterday and today. Today's price is now trading down through this old high price, which tested the, this is going back 2 weeks, which tested the 200-bar moving average on the 4-hour chart. So the sellers are definitely making a play here. Let's go back to our hourly chart and see where we stand in regard to that. And as you can see, the move to the downside is moving below the 100-hour moving average. That's bearish. We also, are moving below this level right through here, which was the again that high price, and we've rotated to the downside. Like the euro versus U.S. dollar, we're in between the 100 and 200-hour moving averages. We'll return back to sort of the levels that we saw on Friday. This is the closing level. This is a Monday low right here. So kind of filling that gap right through there. So we're back in a neutral area here for the dollar versus yen. Market's trying to figure out what it wants to do. So resistance above right here, support down here, in between, up and down, above and below, maybe this old high price going back to the beginning of May. and we'll see which way the market wants to go. It's one of those things where, you know, it's up to you. Do you think to see the dollar higher, or do you see the dollar going lower? What we do know is we need to get below the 200-hour moving average, get below the 200-bar moving average on the 4-hour chart, and the 100-bar moving average on the 4-hour chart to increase the bearish bias on the top side. We need to get above the 100-hour moving average, get above the swing area, and most importantly, get above this swing area, which stalled the rally and goes back a long way on the 4-hour chart. So be aware of those levels. The market's setting up, but it's trading more of a neutral bias. Finally, let's take a look at the sterling versus US dollar. I'm going to take a look at this price action here. Friday and Monday moved sharply to the downside, broke below 38.2% retracement. That's of the move up from our April low to the high price that we saw in the month of April as well. So we tried to hold support there, failed. Move below the level, but could not sustain the momentum, and then reestablish support at that level here and here before moving to the upside and trading. Just yesterday, a big move to the upside, retracing all those declines from Monday's trade. That move to the upside got back above the 200-hour moving average, the green line in this chart. What we do in trading here today, we come down toward that level, found support buyers against that level. Risk can be defined and limited against the 200-hour moving average. And in this case, we are above both the 100 and 200-hour moving average. So the bias is more in favor of the buyers. The only problem is that we did find resistance up here against the swing area, where the swing area is an area that dissects or keeps the price away from the extremes here. Put them in red here. These are the extremes that led to the high price from 2025 up to 134.41. So this area is definitely the next target that needs to get to and through between 133.618 and 133.784. But don't be fooled. The buyers are more in control in the pound versus US dollar. We're going to watch this high price from last Friday's trade as close support to start the day. If we move below that level, then we could head back down toward the 100 or 200-hour moving average, the green line in this chart. If we hold support against that level, it gives a springboard for another run toward the swing area right through here before we head up toward the extreme. So there you have it. I'll look at the three of the major currency pairs that kickstart your trading day. My name is Greg Mikulowski. Good fortune with your trading. Bye-bye now.